Hi, everyone. Welcome. I'm Nita Raghawansi, President of MMF-US. Welcome to our, 700th webinar in our multi-week webinar series brought to you by MMF-US. I want to give a shout out. I guess we're all on screen, right? I want to give a shout out to Wesley O'Hara over here, who's our VP of Education and Membership, for mostly putting together this fabulous webinar series and being quite the inspiration for it all. He said he had nothing to do. He's off the road from all his crazy travels, like the rest of us, and he's done a great job. So a shout out to you. Thank you, Wesley. So in case you don't know about MMF, I'll just do a really quick rundown. MMF is a 27-year-old trade association for the music managers, and we help service the needs for managers and self-managed artists and the artists managers manage, and the rest of our community by providing resources and connection points, information, advocacy work, and generally all kinds of other good adjectives and nouns and verbs to help our community. We know these are uncertain times, and we've been trying to basically, with Wesley's help, curate something where we are a series where we're addressing maximizing monetization. And of course, all of you have reached out saying, we need to know more about grants and funds and loans. And so at the very last minute, we put together, and we thank our panelists for coming together with us at the very, very last minute to do this wonderful webinar series. Wesley, do you want me to do a quick rundown first, or should I wait to the end? What's our format?
Quick rundown now, I think.
I should do my part? Okay, so I'm going to jump in. I'm going to just tell you a very quick resource and a place to go where, if you're looking for like one nice place where all of the funds are listed and all of our all your options. There's a coalition of over 50 creative industry organizations, mostly music organizations, including MMF. They came together to say, hey, we do something, and we put together this great website, and it's musiccovidrelief.com, MUSICCOVID relief.com. So first and foremost, I want to lead you to that website. It basically breaks down loans and unemployment insurance, and then it goes into a very long list of a variety of the music industry organizations or ones affiliated with the music industry, such as Facebook, who have created a variety of funds. In general, these funds are have a variety of criteria. For example, the SAG-AFTRA fund requires that you be a member of SAG-AFTRA to apply to their COVID relief fund. The Blues Foundation, it has a fund, but it's specifically, I believe, to address health-related expenses that you might incur. Music Cares has a fund, and they tend to be giving up to $1,000, and you have to show a couple of different things on their application around cancellation that has led to you incurring a financial loss. So I just wanted to give you a quick place to go look and find this list. And I know that Monica and Eric are going to take us through some of those application procedures and all their wonders, but I wanted to just tell you that there is a resource just in general where you can go. I think that's good for now, and then I'll circle back later. So Wesley is our fabulous moderator today. Wesley, take it away.
Thanks, everyone, and thank you again, Monica and Eric. You can't see Eric's face yet, but he is here in voice and in screen sharing very soon. There are just a couple other things to note about the webinar itself. If you have to leave at any time, don't sweat it. There's a recording that we're making of this session, and we're going to be putting it up on the MMF-US website after we edit it and make it, faster paced, so you don't have to have that same live experience yet again. And otherwise, there is a chat section at the bottom of the full GoToWebinar panel that you have, and there's a question section. So if anything is going wrong, feel free to just put it in the chat section and send it to organizers, and that'll send it to me. And then I can liaise with you during the webinar to try to make sure that thing gets fixed. And then if you have any questions, please type them in the questions box and we'll go from there. And we'll come back to any unanswered questions at the end of the session as well. Otherwise, I think we're going to go ahead and hand presentation over to Eric with Sweet Relief. Monica, can you pop off your webcam for now? And then Eric, you should be able to screen share in just a second. And Eric, can you tell us a little bit about yourself and what you do at Sweet Relief and kind of what your day-to-day is, just to kick things off?
Sure. I'm gonna say nice to be here. Thanks for inviting me. Anita's a good friend of the family, so when she asked, I carved out the time to do this. My job here at Sweet Relief is I'm basically in charge of the fundraising, and most of our fundraising comes from the music industry. So I am really kind of the what they call the artist, the development guy and the artist relations guy, and so I work with artists and artist managers to kind of create strategies where we can work together to help raise funds for musicians and music industry folks who need help. And I can tell you a little bit about Sweet Relief, how we got started.
Yeah, cool. Let's kind of start off. How did Sweet Relief get set up, and like what's its core mission?
Okay, so Sweet Relief was set up in 1994. So in 1993, a lovely lady musician named Victoria Williams was heading out on tour with Neil Young, and she started noticing some symptoms of what turned out to be MS. So what she was diagnosed with. So medical bills were mounting, and she decided to put together, actually Lou Reed's wife decided to put together a benefit album for Victoria. Lou Reed was on the album. Had some amazing people on there, Pearl Jam and Lucinda Williams, and just a great list of folks who loved Victoria. And the album sold really, really well. In fact, to this day, a lot of people say, "Oh, I remember that album." That's what they know about Sweet Relief, is that we had that album. We're still going strong, but it was a great album. There was a second one that followed, and it raised, in the words of Victoria, more money than she needed. One of my favorite Victoria quotes. So she started Sweet Relief Musicians Fund to help other musicians who were facing financial difficulty due to a medical issue. She knew that there are a lot of musicians out there who need help and don't necessarily have Lou Reed to put together a benefit CD for them. So she started the fund, helped a lot of people, and we've been going strongly ever since. The fund was revitalized in 2008. And
Cool.
it had lulled a little bit.
Right now, there's a different fund within Sweet Relief that's specifically for COVID relief, correct?
That is correct. So we foresaw this crisis coming in early March. We saw that there was going to be a great need. So typically, you would need to have an illness or a disability or an age-related problem in order to qualify for aid from Sweet Relief, and a financial need. But for the COVID-19 crisis we're all facing, we've waived that illness criteria. We're considering this whole disaster to be caused by a medical crisis. So the only criteria that you need to fulfill in order to be eligible from a grant is you have to show that at least half of your income comes from working in the music industry. Show us some proof of cancellations that, hey, I've lost, this much money, and show us proof of financial need. So it's a little bit different, the criteria for eligibility, than our normal criteria, but times are a little bit different too, and it's been quite an unprecedented experience. I got to tell you, we've received well over 5,000 applications for assistance. I don't know why my computer just did that.
That's interesting. High mail. But okay, while this is all going on, what are kind of the main, are there any specific sectors of the industry that you're seeing more or less actual kind of applications for relief from?
It's all over. It's musicians, of course, artists themselves, it's agents, it's managers, it's a lot of crew people, a lot of tour managers, a lot of lighting guys, sound guys. It's people who own recording studios, even. It's people who work at labels. It's everyone who's been furloughed that maybe worked at a label or worked, did social media for an artist, or this front of house people, the stage managers, the stage producer, everybody
Yeah,
in the
everybody.
industry. The touring industry
So
got wiped out,
there's
and a
no
lot of it comes
limitation.
with it.
Yeah, so there's no limitation by category as far as where you guys can work with actually providing support to the industry
No,
at this time.
as long as half your income comes from working in the music industry, you're considered a music industry professional, and you fulfill that criteria.
Fantastic. And then what is the actual application funding look like? I'm assuming there's a form process on your website, which is fairly straightforward and provide proof and documents and all that stuff.
Yeah, very straightforward. If you just go to our COVID-19 fund here in the drop down, it's all pretty easy. Fill out the application, submit it. Kind of gives you a little breakdown about the very easy criteria. Yeah, that's about it.
Cool. And then as far as donors, how are incoming donations at this point? And let's assume there are some people who are potential donors on this call. What are kind of the main reasons that people should donate to Sweet Relief?
So the donations have been amazing, particularly as usual from the music community. We've had some live stream events that I was completely shocked by the success of a couple of them. One of them a few weeks ago called Digital Mirage, which was on YouTube and put together by some incredible people. Proximity and the Nations and Brownies and Lemonade all got together to produce this incredible show that streamed for 3 days. And the community really stepped up, and it raised $300,000 for the COVID-19 fund. It's going to help a lot of people. So yeah, we've got another one similar to that lined up for this weekend, and we've had a smattering of smaller shows in between. That's been pretty much the driving force. Of course, a lot of private donations coming in, a lot of foundations stepping up to help. Some of the bigger companies, Universal Music Group, and a lot of people stepping up and wondering how they can help. And this is what we do. We've been doing it for 25 years, and we're doing it now. We've just ramped it up. We've had to bring in additional staff to handle the influx of applications and to get the funds out as quickly as possible. Just a note to the donors that find this particularly attractive: we pay third parties. We don't cut checks directly to the recipients. So when I say third parties, I mean we'll pay landlords directly for rent. We'll pay utility companies for electricity and gas, and so on and so forth. And the donors like that because they know that the funds that they donate aren't going to be misused. So they'll be used for vital living expenses.
So would you say that is one of the primary differentiators between you guys and other funds such as Music Errors or others in the space that you would view as in the same kind of sector as you?
Yeah, that is a differentiator. Absolutely. The other couple of things that we do a little bit differently is we really are able to, we have a lot of flexibility when it comes to how the money gets to where it's going. So we try to eliminate as much paperwork as possible. We understand, we're used to dealing with people who have an illness, and so we've grown accustomed to making this as simple as possible. And you don't have to fill out tons and tons and tons of paperwork. We actually accept applications. If you've already filled out a Music Cares application, you can send that over. We're not going to make you fill out another one. And so we'll reimburse if somebody had to come out of pocket for themselves. They can send us a receipt, and we'll reimburse. We're willing to take those extra steps as human beings, understanding that this is another human being who's doing their best, and we don't want to have any extra hoops in place, especially during such a stressful time for all of us. So yeah.
Cool. So, and then what kind of other campaigns are upcoming for Sweet Relief, and how are kind of like the peer-to-peer campaigns looking as well right now?
Yeah, so peer-to-peer campaigns are something that we've advised artists to do for themselves. It's a great way to, it's just basically using the Sweet Relief platform. They can create a unique link that they can share around and raise funds for themselves and for others. Because once $400 is reached, as I can show you down here. Once you hit the $400 mark, which, by the way, I should mention this, $400 is the maximum amount we're granting right now. We feel that that is the number that can make enough of a difference, and we can help many, many more people than if we're granting more. We hope, as more funds come in, to be able to raise that number. If we do, we'll be going back to all the previous grantees and making up the difference. So
And
when someone does a peer-to-peer
that's $400
campaign,
a one-time thing for now, correct?
correct. Yeah. So just to finish on the peer-to-peer thing.
Back to the peer-to-peer campaign. Didn't mean to.
So someone starts peer-to-peer, they get their unique link, they share it around. Once their peer-to-peer hits $400, after that, they would keep 80% of that, and 20% would go back into our COVID-19 fund to help those who maybe don't have a community, a social media community that can lift them up. And I want to mention that this is really important, that any funds that come in through our COVID-19 fund, anyone who donates to our COVID-19 fund, Sweet Relief is taking zero admin on those funds. This is a disaster situation. We're treating it as such. Our admin is paid through other donations through other funds, and everyone can rest assured that 100% of the money they donate is going to go straight to the people who need it.
Awesome. Cool. I think that's the main batch of questions that I have for you about Sweet Relief, and I think just really quickly going to take a look at the questions from the audience before we let you go. All right, so are there any different kind of levels of funds that people receive based on the amount of need that they have, or based on the level of loss that they've experienced of income? For instance, let's say I'm an artist manager, I've lost 50% of my money, and that's $2,000 a month, compared to if there's someone else who's lost X amount of money for X number thousands of dollars a month. Is there kind of like a weighting system, or is everything pretty much at that $400 payment level?
Yeah, it's at the $400 payment level. We do have a question on the application: how much are you asking for? And I think, I've looked at thousands of these applications, and no one has asked for less than $400. So we haven't even been faced with that scenario. So everyone who gets a grant is pretty much getting the 400. Which another question someone might have, I can just answer off the bat. A lot of people ask how we choose who, what's the criteria met, who gets it, how do we decide who gets one and who doesn't? And it's simply done on a first come, first served basis once the criteria are met.
Got it. Sounds good. And then Nita, if you have any other questions, or Monica, if you'd like to hop back on and ask some questions as well, now's the time. Otherwise, we're going to let Eric disappear. Hey, Nita, welcome back.
Hi. You know what? I think we covered it, actually. I don't necessarily have questions. I mean, Eric, I apologize because I was looking at my phone for a second. Did you walk us through a little bit of any of the, you think there's any confusing questions on the application? Anything you think you need to clarify, or is it pretty straightforward? Have you had any sort of asked questions?
I think it's pretty straightforward. The one place people might get tripped up, because I've had a couple of complaints, although I've tried to fix it as best we can, is that you don't have to be ill to qualify, as you typically would at Sweet Relief. And right. You don't even have to be ill necessarily to qualify at Sweet Relief. You just have to be suffering due to a medical condition that you're now paying bills on, and it's overwhelmed you. So you could have healed from your wrist injury, but if you're still paying the bills on that, So there's no medical requirement necessary to qualify for COVID-19 relief through Sweet Relief.
Okay, cool. I'm good. Thanks.
Anything
Monica,
else?
I'm good.
Okay.
I'm all good.
All right, guys.
In that case, Eric, thanks so much for your time. And I'm assuming the contact form on the website is the best way for people to get in touch with Sweet Relief if anyone has any extra questions.
Yep.
Fantastic.
All right.
Thanks, Eric, so much. And I hope you have a great rest of your day. And
yeah. Thanks for having me.
Talk to you soon.
Okay. Yeah. Thanks, guys. Bye.
Yeah. And now we're over to Monica Tachman, who's a partner at MMF-US and Phillips. And Monica, can you pop your webcam on? And while you're doing that, I will pull up your presentation.
Okay. Hey, Wesley, I have a quick question. Or I just am. Everyone can type in questions, right? I was trying to type myself.
Oh yeah, everyone can type in questions, and I went through and I checked all of the audience questions to see what there was to see.
Oh, that's right. Okay, good. Thanks. Bye. Hi, Monica.
Hi.
See you later.
Well, Wesley, how are we going to do this? When I want you to change a slide, I'll just say slide.
Basically, yes.
Okay.
Just give me 1 second now.
All right. We've had some technical difficulties loading my PowerPoint.
Okay. Just a window. Let me just exit out of here really quickly and go back to the beginning. And then here we go. Thanks for bearing with us, everyone. This is tons of fun.
Can you make it a little bigger?
Okay, do we have full screen Keynote PowerPoint open for everyone? Yeah?
Yes.
Great. So Monica, take it away.
Okay, hi everyone. Good to be here today. Thank you, MMF, for having me. I'm here to talk about the CARES Act and make it hopefully a little bit more practical for managers and for their clients, and take something that's fairly esoteric, right, and bring it down to reality for the music business. It's something that I dug into because as my own clients and clients of the firm were digging into this, and I was talking to business managers and managers, there's a lot of confusion out there about these loans. So I want to take you through overall and give you some golden rules, give you some tips, tricks, and pitfalls, and then of course I'll be available for questions afterwards. Okay, Wes.
Cool.
Next. Okay, there we go. How do you spell relief? That's C-A-R-E-S. That's the CARES Act. The CARES Act, as you probably have heard and have read about and have gotten a lot of emails about, is the package to provide relief for businesses and others that have been disrupted by challenges related to COVID-19 outbreak, including cancellations and shelter-in-place orders and so forth. The CARES Act is a very big piece of legislation and is far bigger than just the two elements I'm going to speak about today. But these are the two things that I think directly relate to our community, and so that's what I'm going to focus on. The first is the Payroll Protection Program. It was a $349 billion program that was used. Yes. Oh, is something happening? Hello? Hello?
You're there. Keep going. We can hear you. I don't know what happened.
I got a flash that there was technical difficulties. Okay, so the Payroll Protection Program, we expect that there's going to be an additional $326 billion to refund this program. So if you haven't applied yet, you're not out of luck. And if you haven't received your money yet, you're not out of luck. It's still being worked on. It's so recent that it was only Monday that it cleared the Senate. It still needs to clear the House and have the president sign it. So it's very much in play, but that's why I want to do this thing today so that you're ready to go when this money is ready to go. Now, one thing with the Payroll Protection Program, it's done through SBA approved lenders. There's a list of them on their website. You can look at the form on the website. The form looks very simple. It is not that simple, and we'll talk about that as we dig into this program. And you apply for it through the bank. I'm also going to speak briefly at the end of this program on the EIDL. Again, this was there was a fund of $562 million that was really made for disaster relief. This was something that was already existing prior, and then was, I guess, fortified by the CARES Act. And they're getting a lot more money. $60 billion is going to be going through there. So that's a huge upgrade. And that you'll be applying through the SBA website. And we'll talk a little bit more about that. Slide. Slide. Hello? Anyone there? Okay.
Wait,
Hello?
I'm getting a call from Wesley. Hold on, Monica. Everyone stand by.
Okay. I don't have access to my own PowerPoint, so bear with me. This is always the worst nightmare of not having the PowerPoint work. Here, this is what I'm going to do while you're working on that, Nita. I'm going to talk about it without the slides, just to keep things moving.
Monica, go ahead and talk without the slides. Yeah, I mean, Wesley's on, but we're not seeing him, and he's forwarded to slide number 3, but it hasn't. So if you wouldn't mind going ahead and talking without until he fixes it. Thank you.
Okay.
So sorry.
Okay. So where was I? Okay, so the Paycheck Protection Program. Let's talk through eligibility. And I'm sorry you guys don't have this slide. You email me, I'll forward it to you. Okay, because it's helpful, I think, just as a checklist for you to be seeing what it is. So how do I know whether I'm eligible to apply for these funds? If you were operating on February 15th, 2020, if you have employees that you pay salaries to and payroll taxes to, okay? So a business cannot borrow for independent contractors. Independent contractors can apply for themselves as their own self-contained business, and we'll talk a little bit more about that. If you have 500 or fewer employees, I think that's probably the case for most of the people on this call. If you think you might be close, there's a whole bunch of criteria to sort of mitigate what that is, and we can talk offline if that is you. You have to have a physical place of business in the U.S. and transact business in the U.S. You need to be a U.S. citizen and lawful permanent resident, and your business has to be substantially impacted by COVID-19. So there's two aspects of this that I think require a deeper dive into, and one is what's substantially impacted by COVID-19, and the other is really about payroll and employees, as that's sometimes a murky designation in our business. You also have to answer no to a couple of things, and normally I would just show you the slide, but since you don't get to see it, I will read through it. If your business is engaged in any illegal activities, including anything related to cannabis, loan packaging, speculation, multi-sales distribution, gambling, and etc., lending, you would not qualify. And if the owner of the business is on parole, probation, has a pending criminal charge or conviction, past felony or misdemeanor against a minor past 7 years, you would not qualify. Moving along, details in the PPP loan terms, and this is really it's really an interesting and amazing product, and I'm so glad it's available. It does include sole proprietors, independent contractors, as I mentioned before, self-employed people, right? And whether you have an LLC, an S Corp, or it's just you. And yes, it does cover touring companies and furnishing companies and even nonprofits, Nita, so something to think about. How much money can you get? The maximum is the lesser of the business's average total monthly payroll costs during the 1-year period prior to the loan being made, multiplied by 2.5, or $10 million. So it's the lesser of those amounts. And we'll get into how to calculate those payroll costs to make sure that you're getting the most that you can. Other loan terms and is that it's only right now it's only a 1% fixed interest rate. It could go up to 4, but are you
Wes
back?
just turned on, FYI.
Is he
Okay.
back? And do I have my slides back?
I'm back and you have your slides back. I'm sorry, just give me 1 second.
Okay.
Okay.
Now I have to find you again. Hang on. All right, great. I always tell my clients that no matter what happens, the show must go on. And I guess that applies to me as well.
Is this where we're supposed to be?
We did that. We did that.
Okay.
Let's go
Next
one. Okay, that's kind of where I am right now. Okay.
Okay.
So the fixed interest rate is 1%. And loan payments are deferred for 6 months. I can go as far as a 2-year term. There's no collateral, no personal guarantees, right? No SBA application fees. And you're eligible for loan forgiveness. That is the most exciting part, in my personal opinion, about this whole thing. And we'll get into the dynamics of that in a moment. Okay, next slide. Application process. Okay, so a lot of this is in flux, including the very first item, which is that the program ends June 30th, 2020, because there's another package coming through with additional monies that obviously will not be deployed for a couple of weeks. In the best case scenario, I imagine that date will get kicked out, but it's in there right now. So that's what I'm going to talk to you about. So you get the money and you have to use it before June 30th, 2020 in order to qualify for loan forgiveness, right? So you have an 8-week period minimum, right, to utilize. In order to get the funds, in order to apply for them and get them, you need to demonstrate economic uncertainty that makes this loan necessary. Obviously, for the music business, there's lots of reasons why the future may look a little uncertain right now. The funds must be used to retain workers and make payroll as well, and you can use it as well for payments and mortgage and other debt payments. But the purpose of this legislation is to keep your people employed, right? And so the guidance is 75% to payroll. So 75% of the money that you are able to get under this should be used for payroll, and you can use the other 25% for these other purposes. Now, I'm just going to say something about this because I've seen on a lot of websites and so forth a gloss over on it, and it's important for everyone to know that misuse of the funds is subject to, criminal sanctions. You could go to jail, and you could owe the government a good deal of money. So you do want to be careful. It's not like just apply just to apply. Like, you want to make sure that you're applying and that you are meeting the criteria, because there is some downside to not doing it correctly. Okay, slide. So I said I want to talk a little bit about necessity and what does it mean to be affected by COVID-19. I mean, obviously some examples include torn personal appearances, cancellations, record release and marketing disruptions, actual health issues by employees or employer that would impact the business, payment and accounting disruptions, right? And it doesn't have to be happening right at this moment. It could be just something that is foreseeable. But the point of the golden rule is meant to support you and to keep you going as you have been without pulling you under, right? The idea is for you to continue to pay your employees, including yourself, that may be an employee as well, and to keep you in business. And not to be in a situation that doing so puts you into bankruptcy. All right, so that's the point. Now, what I want to say about what does it mean to be affected by COVID-19, and just talk a little bit about it. Right, so obviously you have an artist that you represent that was touring this year and had cancellations, or that was planning on touring this year and you never got to do that. That obviously will be materially affected by COVID-19. Right, if you represent an estate, just to have the outside. The other side of the spectrum, obviously they're not touring. and whether or not they're affected by COVID-19 and your management of them is affected is something that requires some analysis, right? There may be some effect on, royalties and so forth, and things that may not happen as a result, licensing and so forth that may not happen as a result, but it's not as straightforward. So it does require just a little bit of thought when you're making this application. Okay, slide. Use of loan proceeds, I already touched on this, but I want to talk about payroll. Payroll is everything, right? It's what you pay them. It's what you may tip them. It's the bonuses, right, that you might have given them. Vacation time, medical, health benefits, even taxes. It's all part of the ball of wax that we're talking about. So when you're doing that analysis on that, that 2.5, you're looking at this in its entirety. And again, even if you are the employee, right, this comes into play. That said, that there is a cap on this, right? So if your payroll costs for particular individuals in excess of an annual salary of $100,000 as prorated for the relevant period, then you need to prorate that, and that's the cap. So if someone was getting paid $200,000, you would have to cap them at 100, and then prorate that when you do your analysis and calculation. Slide. Now, this is my favorite slide. Loan forgiveness. So it is potentially free money. If you spend this money during the 8-week period after the loan is made, and you spend 75% of it on payroll, and you pay 25% it can be used for other things, that are listed here, you will almost likely get forgiveness of the loan. So those terms that we talked about earlier will not even apply. It truly is potentially free money. Now, note that there's limits to this, of course, and if you've let go of people, right? If you have cut their salaries or so forth, that's going to impact how much forgiveness you're going to get, but that's not going to impact necessarily the money that you receive, right? It's just going to impact the forgiveness, right? So those are important distinctions, to be made. And same thing about the June 30th, 2020 date, which may change, but right now, if you spend it before June 30th, 2020, you'll be forgiven, and if it's afterwards, you can still use the loan proceeds afterwards, but it may not be forgiven. Although I expect there'll be changes to that as new money comes in, or it will be connected to when you actually received the funds. And then here's another just lovely aspect of this is that forgiven income is not taxable. It's not a taxable occurrence. So that's a really nice thing to do here. And again, the idea and the thought is let's keep people employed, let's keep things afloat while we take this temporary action of sheltering in place and having to shut down our businesses or work at a diminished capacity during this period of time. Okay, next. There's always a little bit of a catch. First of all, you have to remember that it's not automatic, the forgiveness. You do have to apply for it. You have to apply for it through the bank. And there isn't a lot of guidance on this because funds are no loan yet has been forgiven, right? So we'll know more once we get past that June 30th date. There'll be more guidance on the mechanics of this. But my advice to you in the meantime is just document like crazy, keep track of how you're spending the money, make sure you have all the receipts and can certify as to how you spent the money. Okay, go ahead. Next slide. Are we frozen again?
Next slide. Oops.
Next slide. Yeah.
What slide are you seeing right now? I'm seeing tips, pitfalls, and other things.
Oh, no, I have with a catch.
Oh, okay. Sorry. I will exit and come back in.
Okay.
Okay.
I think Wesley just like, I know this is not the most interesting program I've ever put on. I tend to try to make panels and webinars a little bit more interesting, but you know, this is sort of serious stuff, right? And it's hard to make loan and, you know, finance type things extremely entertaining. But doing the best I can. Okay. Are we still frozen? Okay. Well, this is just a slide just to show you how the money was spent as of 4/16, who got the loans, right? And you know, our industry, I think, got 1.49%, and it's a bigger industry than just music. It's entertainment, arts, and so forth. So I hope we do better on this next round, and hopefully this presentation will get more people to apply or to apply correctly so that they get more. I don't think this is the slide that I'm looking for.
I'm sorry, we jumped the slide. Give me 1 second again. Lessons in ongoing slides. Okay, so this is, we just covered this one. You just discussed this.
What was the one before that? No.
The one before this is tips and, sorry, pitfalls.
I need that. I need that one.
Okay.
That's why everyone stayed on the phone for so long. That's what they want to know.
Here we go. Great. And then.
Okay.
Okay.
All right. So the loans are processed on a first come first serve basis. And I know from my own social media and from conversations I've had with my friends in the industry and the people I work with, that there's been a lot of frustration around getting these loans and getting the applications in and getting even responses from banks. You know, part of the reason for this is that the big banks, right, the big ones like Chase and Wells Fargo and so forth, to cut down on due diligence, they started from the very beginning limiting applications to those people they had existing banking relationships with. And then I think there was probably another layer of having like deep relationships with. So, you know, there's been just so much discussion about, you know, all these big companies that got these loans. And part of that's because a lot of money has gone through those banks, and I think they prioritize them. It's also why, you know, community banks and credit unions best. So people that I know, my own included, that have gone through the smaller banks have gotten the money faster, and have actually gotten the money and gotten, you know, communication around their loans. The good news is community banks and credit unions are still accepting applications from new customers. So you know, something just to think about. It's not to say that the big banks aren't going to help you. It's really about working your relationship, right? It's really about working your relationship and letting them know how much it matters to you. So a pitfall and just something I want everyone to be aware of is that, especially because 2019 taxes were pushed off and a lot of people haven't done them yet, myself included, is that you know, your taxes and your application need to dovetail. And there's a natural tension there, of course, right? Because on your taxes, you know, it's all about deductions. It's all about having as as possible, that then reduces what you're bringing in and what your taxable income is. Whereas on this application, as you have, probably the more money that you might be getting as part of this program. So it's just important that these two things dovetail. They are both going to the federal government. I don't know if there's going to be anyone that's checking them off, but it is something I would just put a warning sign around for you to be careful, and definitely talk to your accountant. I mean, again, there's an element of good faith here. We don't know everything yet. We haven't necessarily done our taxes, but we do want those things to look as close as they possibly can together. Understand that the PPP, you'll look it up and you're like, why did Monica talk for 20 minutes about the PPP? It's so simple. It's 2 pages. It's not that simple. Otherwise, I wouldn't be here, right? It's not that simple. It's way more complicated than it looks. Even what I've told you so far isn't all the information that's out there, which is what I have thought would be useful to you. There's a deeper dive to do. The government's put out 3 different rounds of guidance on the applying for the PPP in 2-week period. That's a lot, right? So there's a reason for that. It's because it's a little bit more complicated than it looks. There is something that if you've already applied, you can rely on whatever the guidance was prior. If they didn't clarify it, you can, work, as long as you worked in good faith, you'll still, you won't get into trouble. Just something to be, already talked about the 8 weeks you have to spend the money. And then like the golden rule here is that, you just need to think about things and strategize about them, right? Consult your professional team, consult your, your friends, and so forth, and the people that you work with. Because if you're looking to take care of your employees, which is really what the program is for, think about it, right? Because part of the CARES Act is to, increase funding for the unemployed, and it may be that they get more money under a different program. So, you have to think about what's right for you and your business. You have to think about what's right for them, and don't just knee jerk, to do it. Just, have a little bit of thought that goes into it. And I'm just saying this, I don't think it really relates to this group, but the PPP does not negate stay-at-home orders. I've heard from a couple of people, really more in the, in the retail space and so forth. It's like, oh, I'll get the PPP loan and I'll get my work for free, basically, because I'll get reimbursed by the government. If you're not an essential worker, you have to stay home. You have to, follow what your governor's instructions are. Just because you're getting this doesn't mean that, you can necessarily, defy the, the local order. But most of us can work from home, and so this is a really nice way to keep our businesses going during a hard time, and when things may not be as efficient, and when sort of our general income or whatever our thoughts were, what we were going to make, look to be a little murky at the moment. So that's my rule of thumb on that one. Next slide. Wes, there you go.
Is it showing? It's not showing.
Really, yeah, we're good. We're good.
Okay.
Just really quickly on the ED, I know I've been talking for a while, but I'll finish up. On the EIDL. So the EIDL is another loan, right? It's another program that exists, right? That's getting, funded again. The most exciting thing from my perspective about the EIDL is that they had a grant that was set up, a sort of a grant / advance, right? You could apply for the EIDL, but if your need was immediate and you needed real help, you could go get $10,000 or up to $10,000 in fairly short order, and supposedly within 3 days. I think it's been more than 3 days, but it's meant to be, a quick fix. And even if you get the EIDL loan, because the criteria is higher in many instances, you'd be able to keep that $10,000, and that was givable as well. So that was something that was really great. Now, the difference between EIDL and the PPP is that the EIDL is much broader in scope. You don't have to use it just for payroll, right? It's really for business concerns and for refinancing and keeping things going, having a disaster and really not knowing what the implications are going to be yet, right? So all that scrutiny. Now, because they got such a huge amount of applications, we put out a reg not that long ago that reduced the grant from $1,000 to saying it's about $1,000 per employee. And so that then brings it a little bit more into line with the PPP. I don't know what's going to happen when they get this much bigger amount of money that's coming through. I don't know if they're going to change it back. I don't know if they're going to review the other loan applications that they already processed. We're not sure. I mean, we'll know soon enough, right? But these do appear to be fairly easy to get going on. You can go up to $2 million. As I said, it's a bigger scope, but they are not forgivable outside of the $10,000. It's not forgivable. So hopefully this has given you like a little bit of a framework for how some of this works. I think it's at the end of the presentation. Yeah. What's the next slide?
Yes.
Did I get there? Yay, I got there. Yeah, so this is changing all the time. Right now, all these programs are out of money, right? And if you have an application already in with a bank, it may still be ready to go. Like they may be like, as soon as this money comes in, they're going to pull the trigger and put your application through. There was a limited amount of money that was given to each bank, right, to each SBA approved lender. So you may still be getting it even if you already applied. You can only apply once. So I want to be really clear about that. You can't apply to 5 banks and get money from each of these banks. So again, be strategic, think through things, right? There can be some repercussions, but I want you to be ready to go when this is going. I am an entertainment lawyer. I am a deal maker. You usually see me at events talking about recording deals and publishing deals and things like that. I usually don't talk about loans and refinancing. So I really want to give shout outs, even though they're not on this call, to my partners who I've gotten to know really well over the last 4 weeks. And who helped me put this presentation together. If you have questions, one of the great things about being at the firm that I'm at is that I can, if I don't have the answer to you, I can get you the answer because I have everyone available to me. And then I also want to put out to you that we have, and it's available to everyone, you don't have to be a client, a COVID-19 updates and resource center. We have a healthcare practice and a what I call an advocacy practice in DC, legislative practice in DC. So we do get a lot of information, do a lot of analysis. We make it all available for everyone. Our point in all of this is just to come out of this as good as we possibly can be, and with the hope that we end up, there's some silver lining in it. So please avail yourself to this and email me if you need anything. And I'm doing more webinars and so forth, not just on this subject, on other subjects too. And I just want to support my community and let you know we're going to make it through. We're going to make it through.
Thank you, Monica. I'm jumping in because I have a couple of questions. Can I go, Wes?
Sure, go ahead.
Couple of questions. One is on the EIDL loan. I've gotten, sort of conflicting answers on this from a variety of accountants or what have you. And I'm just wondering, and it may be because there's no clarity, but on the EIDL with the 10,000 forgivable, is there any regs around or any rulings or any insight around the types of expenses that will be considered forgivable, in that people were specifically asking about insurance premiums. They have to pay like property insurance and general liability insurance, and they're getting these monthly premiums, and they're like, will that be part of what's forgivable as a normal business expense under that loan, for example?
That up to that 10, okay, just to be really clear, the EIDL loan is not forgivable, right? It's not forgivable. The PPP loan is forgivable, right? But the first $10,000 is forgivable, right? So it's more of like I describe it almost like a grant, like it's an advance. And even if you don't get the EIDL loan, you get to keep the $10,000 if they give you $10,000, right? It might give you $1,000, right? But if they give you the $10,000, you get to keep it and it's yours, right? And you can use it for whatever you need to use it for your business. Okay, there's not all the qualifications about the 75 and the 25 and the list of things that you can use it for. It's truly a disaster fund to get you through. Now they changed this, and there's less regs on the EIDL, right? There's less regs on the EIDL because it's not necessarily a new program, right? There's just one element of the disaster relief program that is new, which is the grant, right? Which comes from the CARES Act. So, and just to be clear, the SBA has been around for 67, 70 years, right? So there's other loans on the SBA that I'm not talking about here. I'm just talking about the COVID-related ones.
My question was around that first 10,000.
Yes.
Like, will there be criteria that one later has to show, this is how I used that first 10,000 in order for it to be forgivable? There's not, I mean, like, you want to do good faith and you want to be certifying and you want to be saying, I need this for my business because of this disaster, and that's why I need it, because of this terrible thing that happened and now I need it. But you don't have the qualifications that exist on you don't have this, this level of scrutiny that's going into it, right? Where you have to certify and so forth. It's like, I guess what's helpful to think about is, you think about a disaster relief, you think about the tornado in Nashville, right? Like, take it out of COVID world for a second. No one knows
like there was devastation, right? There was devastation. Like that's what this loan is really meant for, right? Like who knows what it's going to be? I don't know how I'm going to use it, right? Like I got hit by a tornado. I don't know how it's going to use. I need to survive. I need this money right now to for anything, right? To keep moving. So that's what it's meant to be. But this $10,000, again, it's almost like a grant, right? But people aren't necessarily getting the $10,000. So when this started, everyone thought they were going to get a $10,000 check. And then as they got way more applications than probably ever in the history of them being in the SBA, that was then modified. I don't know what's going to happen after that. And I don't know if I said this before. The EIDL is actually managed by the Small Business Association, right? So it's managed by them. It's not a third party. They themselves are handling it, and they are grossly undermanned. They don't have enough people to process everything, right? So that's how it goes. And I don't know the answer whether or not it's taxable at the forgiveness part. So I'd have
But
to
in terms of
look into
record
that.
keeping, I guess was my question. It's about what kind of bills are you record keeping so that when it gives you up to the 10,000, we know it could be 1,000, is there a requirement to send in then later some proof of how you used it?
There's no requirement to send it, but you should keep good records probably for tax purposes, right?
Right.
And for other reasons, but there's no follow-up to that money.
Wonderful. Oh, that's great. Thank you. That's what I need to know. I'll come back in for my other question because I can't remember it now. So Wesley, I bet you have some there from the audience.
Well, I have a bunch of questions over here. They're all over the place. And so let me just kind of look at one interesting theoretical is what if you paid an annual fee to somebody for 12 months of work as an advance already before the loan starts, and now that work cannot be done? Would that loan still pay out?
Well, the question is whether that was an employee,
Yeah.
is it an employee, or it sounds like an independent contractor to me, right? So independent contractor, I think that's probably a different question, or it might be a force majeure question, right? Whether force majeure has prevented that person from performing. So I think that's it. When we're talking about employees, not independent contractors.
Cool.
Independent contractors can't apply. They can't apply, but for themselves.
Got it. And then if you're, let's say, a C Corp owner and a sole proprietor, can you apply for PPP?
Yes.
Yeah. Okay.
Yeah.
And then let's see what else.
Well, I guess, but let me just put a qualifier on it. Like you have to have income, right? So let's just say you're a C Corp or an LLC or a partnership or nothing, or just yourself, right? And you have a business, and you're just you have expenses and you have income, right? So it's how you're paying yourself. So like if you're, let's say in your first year and you have nothing but losses, well, you haven't paid yourself because there hasn't been any money to pay you payroll, right? Unless you've set that up through your accountant on a cash flow basis. So you just have to, like I said, there's no limitation. You can be set up any which way but loose, if you 70s reference. But you do need to have the cash positive. I can take off my glasses now.
Got it. And then there are a couple questions around people asking some forms of requiring 2019 tax filing information. And how, is there any advice that you have for proceeding around that kind of area?
I mean, listen, it's that I mentioned it in the presentation, right? Because I think it's like it's one of those, like it's like a tension point. Use good faith, right? But understand that there are opposing aspects between what you might file on your taxes and what, like if you're a small business and you're applying on your taxes and you have 80% expenses and 20% payment to yourself, then you're using that 20% payment to yourself as the basis for doing the calculation, right? So there's this tension, right? Because the businesses have expenses, right? And so that cuts into what you might get to be able to pay yourself. Whereas, in the payroll, it's like the less expenses you have, right? The more of that piece of the pie that you're saying is payroll, that's going to get you more payroll protection. So there's a tension, and personally, I mean, just an opinion, I mean, not based on anything, I think it's a flaw. But I mean, what legislation has ever been perfect? None that I've ever come across.
Got it. That is the majority of our questions. Okay, one more. Can you apply for PPP and EIDL?
Yes, you can. I mean,
Okay.
but there's always a but. Understanding the EIDL. I don't know if they're talking about the EIDL advance or the loan. That the loan terms are not as advantageous as the PPP, right? So depending on what you're using the money for and so forth. And so there's that level of like you can't double dip, but if you're using things for different reasons, then yes, you can. I mean, there's a million little multitudes in that, but I'm giving just an overall general advice. I think I have something on that on the website. If you go to our Manat website, I think there's something about the EIDL and the PPP.
Cool. And that is really pretty much all the questions now. So Nita, if you have anything else that you'd like to hop in and ask, then now would be the time.
Sorry, microphone. So the second question was, you were talking earlier about Congress's probability, is it of refunding both the PPP and the EIDL efforts? Did you say timeline? I wasn't clear if there was if Congress had.
I mean, it's Congress, right? So it's passed the Senate on Monday, so it still has to get through the House. And then go to Trump. So there's a little bit of work to do yet, and things may change as they often do. But we will have updates. There will be more guidance. I'm happy to come back and talk again, or like I said, sign up for our newsletters, and we'll share time. We'll share everything as it comes up.
Amazing, Monica. You've been absolutely amazing. Thank you so much, and thanks to Eric from Sweet Relief as well. But it's been great. I mean, Monica, I just love how clear you are about things. It was a great presentation for addressing these things, as I personally had these questions and wanting to help others as well. So it's been really helpful. Thanks for walking us through all that. Wesley,
sure, my pleasure.
Wesley, are you good?
I'm good. Yeah, that's pretty much all the questions.
Can I do a quick plug? Do you mind if I plug a webinar I'm doing next week? Is that okay?
Yeah.
So Manat is doing a webinar next week that's dealing with the live touring business and what does it look like to get back performing live. And this is not the webinar that you think it's going to be. It's not going to be a bunch of music industry lawyers talking about things. We're going to have a professional. We're having consultants. We're having in the legislative aspect of the firm, people who are on the Hill dealing with things. We're going to have employment professionals, employment lawyers, talking about what it would mean, and people would do risk assessment, right, to figure out what it might be to like walk into a stadium again, what might happen in order to do that, and using actual science and so forth. I'll be co-moderating. So if people are burning questions that they want me to ask, I invite you to email me, and I'm happy to put them out there. It will be a short segment, but like I said, if I don't know the answer and we can't answer the question in the very short webinar, I will get you the answer to the extent that I can.
Where can people find that?
Easiest thing would be just to email me, just to be honest, but because there's a webinar invitation. I will send the webinar invitation to both of you, and if you want to send it out to your members, you can, or they can just email me. It is going to be invitation only, but obviously this is the community here, so I'm happy to extend it.
Thanks, Monica. That's appreciated.
Okay.
Wonderful. Good. So I'm Nita, Neeta, at MMF-US.com if you want to contact me. Wesley is Wesley at MMF-US.com. So, and we can then, tie it together and get that out to you. Thank you so much, Monica. Eric, if you're still out there, thank you so much. And thanks everyone for participating. Wesley did a great job as moderator. Thanks again. And we have more webinars coming up next week, Tuesday and Thursday, 4 p.m. Eastern, 1 p.m. Pacific, and whatever time in between. We have Tuesday, 28th and April 30th webinar, so please tune in. We're going to have AdRev, is that one of the companies?
AdRev on April 28th, and a company called Crates, which is a vinyl company, which has a great bunch of free vinyl production for anyone who's working in vinyl stuff right now. So,
yay, wonderful, thank you. And so we'll put it on our website and on our social platforms, on MMF social platforms. You'll be able to catch the details there in the RSVP link. Thank you everyone for joining. Until next time. Bye.
have a great
Bye.